Good afternoon, everyone. Grain futures, livestock futures, energy futures, all in sharp decline on the grains, starting with the soybean market overnight as bean oil and canola oil made new contract highs on Monday and have been stumbling the last few days, and Malaysian palm oil turning lower has our bean oil market under heavy selling pressure along with heavy selling on canola, which starts the chain reaction of selling in the beans. Wheat futures are under pressure again as improving weather conditions on the hard red winter wheat belt are supportive for better yields and lower prices, but spring wheat, the National Oceanic and Atmosphere Administration, putting out that it's been record dry in the northern plains, and it looks to stay that way for several months. So all that's doing is giving spring wheat support on hedges, on the spreads, but still lower on the session. Corn, we had seen a large announcement from the Chinese again this morning, but it's likely a third and final Chinese. This is all you're going to get for buying from China this year. For this crop year, they'll buy new crop corn, but they're possibly done, taking their total purchases to about 117 million bushels. This morning's purchase was some 700,000 metric tons, a large 3-day total, all in front of their meeting today with U.S. trade officials in Anchorage, Alaska, which also comes with some negative news. Right before this meeting to occur, it's announced that U.S. trade has sanctioned 24 Chinese and Hong Kong officials before this meeting due to the passage of a election overhaul for Hong Kong, which basically ensures only pro-mainland patriots get elected. Sounds like something happening in this country, but nonetheless, we're finding that that's kind of frothy as well, frosty for the markets. And so we are seeing liquidative selling, new crop hedging in the December corn and November beans ahead of the end of the month seedings numbers, as we're hearing acreage numbers could be as high as 94 million acres on the maybe beans, about 91 to 92 million acres, both well above trade hoped for numbers. And so selling is abounding across the board today for the grains. We find the soybeans for May now 19 cents right now, low of the session, $13.98 and 3/4. It's been 2 weeks since we were under $14, and now we're dipping our toe there again. July beans down 20 and a quarter, $13.85 and 3/4. New crop beans down 26 and a quarter, $12.09 and a quarter, while the soybean meal just nestles near the $400 a ton mark, which was trying to be support earlier in the week, down $4.50 right now on the meal, $400.30. Bean oil down $1.22 at $53.38, as canola. Also, the May contract made a new contract high on Monday and rolled over after hitting over $800, 800 Canadian dollars per metric ton. The spot March contract had made a contract high a month ago near $850. Now, canola prices in Canadian money on $24.80 at $754.50 a ton. Corn futures on retreat. Again, China big buying, but after they're done now, who's going to take their place? We know we have our normal buying from Mexico and Japan, but until we've seen the Brazilian corn crop, which is going in very late, suffer in May under what is normally a dry window during that period of time, and the corn will be now pollinating during a bad period. It's like having corn in the United States pollinating in late July, early August. Not a good thing. So it'll probably take some concern in that range to push corn prices for the old crop back up to the highs we had seen back in February at $5.75. For now, we've been showing in our newsletter, $5.55, $5.59 is a problem for spot corn. This morning's high, again, $5.58 before tumbling a dime off those highs. Currently, May corn down 7.5 cents, $5.50.5. July down 8 1/4, $5.34 1/4. December new crop corn after May corn, after making new contract highs just 8 trading days ago, down 6 1/4, $4.69 1/4, some 16 cents off those highs. Wheat futures to the downside, led by Kansas City. New lows for the calendar year, down 11 cents on May, Kansas, $5.90. July down 10 3/4, $5.95. Chicago off 7.5, $6.32.5 for May. July down 6 3/4 at $6.23 1/4. And as dry as it is in the plains and continued dry forecast, that doesn't keep wheat from Minneapolis away from getting selling. It just narrows the losses down as much as it competes in a world market. Wheat prices for Minneapolis down 6 at $6.27 1/4 for May, down 5.5 on July, $6.35. The Minneapolis September new crop down 5.5 cents, $6.40.5. Cattle futures, June contract forward, that is every contract that's trading in 2021 except April, and then rolled over and dropped some $2.50 from morning session highs. I take that back in the case of June, dropping over $3 from morning session highs. As cash trade did not improve, the enthusiasm of buying is a lot like crude oil last week that bolted higher in the Sunday night session on the one bomb that was released in Saudi Arabia, but then that was used as an opportunity to cash into. Well, it seems like hedging hit cattle on the new contract highs today, with the cattle on feed report due out tomorrow after the close. Numbers for placements are not down as much as many are probably hoping for. On feed numbers up 2% from a year ago. So cattle under pressure again today, down 72 cents for April, 118.70. June cattle down $1.90, 120.10. Contract high this morning, 122.70. August down 207, 119.60. October cattle down 197, 123.30. December down 167, 125.70. Feeder cattle also April down $2.40, 142.32. May down 275, 147.42, with August feeders off $1.62, 156.35. Hogs sharply lower on the deferreds. April up 30 cents at 93.97, but after opening into a contract high this morning, June down $2.27 at par and 2 cents. August down $2.10 at 98.60. Gold futures, they're up $4, but actually they're down $20 from highs made at 1 o'clock yesterday, or after 1 o'clock after the Federal Reserve meeting. It was interesting watching Chairman Powell babble about transitory. It almost became nauseating how many times he said it, trying to explain away inflation. Gold just rallied every time he stumbled, and he actually turned away a few questions, pushing gold late yesterday to $1,753, and that's where it was late in the session. So when it reopened last night, it opens above where it was at 12:30. It was at 12:30 and has retreated $20-some since then. So currently we are up $4.80 on April gold, $1,731.90. Silver for May is up 27 cents. 26.33. Bitcoin touched 60,000 again today, currently up almost 1,500 points at 59,285. As we look at crude oil, unloading of long liquidation as oil has failed to recover after last week's highs. It had been stalling at our 65 mentioned here resistance for crude oil, even though it had spiked up to 67.98. 65 was as good as it could do, and now with problems in Europe, lockdowns continuing and refusing of some vaccines over there that aren't working out, concerns of oil demand softening over there, and our demand here is not picking up as fast as been broadcast it would. Yesterday, we actually had seen a build in gasoline supplies as refiners come back online from their cold shutdown a month ago. So crude oil under heavy pressure, dropping some 8% at one time. We're down $3.70 a barrel right now on the May contract, 60.94. Gasoline down 8 cents a gallon, 196.57. Heating oil down 10 cents a gallon at 180.75. Any questions, you can find us at heartlandinvest.com. Thanks for listening, and have a profitable